Good afternoon. This is the Elliott Wave Daily Update for the S&P 500, being recorded on Thursday, November the 13th at 1:58 p.m. Pacific Standard Time. I know I called for a C wave and I know I called for it to go down, but I have to tell you, it surprised me on the depth that it ended up reaching. It did not break any rules. In fact, here on the ES, it came down basically to 0.618, the C wave, 0.618 of the A wave. And that's totally acceptable. In fact, that is what we would expect it to be, between 50 and 62%. Let me take it off that line chart, put it back in the bar chart, and you can see the extreme goes all the way down. So we reached it, and then we bounced. And we're not holding that bounce, but how I'm viewing this is basically the same way that we are still within this ending diagonal fifth wave as the finishing move for the minute wave 5. And so on top of that, we are notes, it's minute wave 5, minor wave 5, intermediate 5, primary 5, cycle 3. So we're finishing a very high level, to me, of our degree, where we would be looking at a longer term and a stronger pullback in the way of a cycle fourth wave. In between, we're finishing this in what I would consider very typical, where the market is just kind of going nuts to get back up to those highs. The market is just very determined that it wants to see 7,000. Then suddenly there's a burp, and there's some reason, and I'll tell you what I think it is in a moment, where the market just turns on itself almost and just really starts to cut it and cut it to ribbons. And now when we look at it on an hourly chart, it doesn't look like all that much. But in reality, when it's coming down on a dollar value and a nominal value, even if you're trading options, whether you're trading futures, whether you're trading stock, there were very large moves today. And because we're up at, in many of our stocks, all-time highs in the stocks, all-time highs in that whole area within the indexes and the ETFs, that these moves are intense. The volatility kind of cranks up, and the volatility in the options cranks up. But at the same time, the options trade, I believe, is truly just continues to increase in volume. Today, we saw very strong volumes. And let me just quickly go. The S&P in the mini was over 2 million. Let me just take a look at, and let me just put it in here. It's going to be the MES. And I just need to put December Z25. Let's see if it'll pull it up. No. But I know I can get it. So the regular future was over 2 million. I'm sure the micro was probably 3.5 to 4 million contracts. In the NASDAQ, we had 764. On the mini, almost 765, which is above our average lately. But I know that in the micro, it was well over 1 million, probably closer to 2 million there as well. So again, the only one that I thought was a little bit on the light side was the Dow, which only did 120, I'll call it 122,000 contracts today. And at one point, the Dow was down well over 800. So I was like, that's kind of strange. But we can come down 48 million shares of Apple, 62 million shares, almost 63 million shares of AMD, which ended up doing a little bit of a reversal today, giving back a lot of what it put on yesterday. Again, going down the line, 41 million shares, et cetera. You go down until we get all the way down to NVIDIA, 206 million shares of NVIDIA traded hands. And that is just a lot of stock trading and a lot of options trading. So a lot of money was changing hands. in NVIDIA, and it got pushed all over the board. In fact, it truly traded heavily all over the place, but it was 191.44 down to 183.85. That's a pretty big move for NVIDIA to be like $8 in one direction or the other. But it took place, and it was very, very well participated. So again, options trading. Options trading is what truly controlled all of this. And I think that in preparation for tomorrow's expiration in all of these stocks and in the ETFs and in the indexes, put a bias out there. This is a move that we've seen now taking place several times right around an expiration. We saw it again last Friday. We saw it in the SPX, where, and I'm postulating, but I'm kind of believing that it's dealers. Dealers are coming in, and we're talking about these firms, these very, very large firms that can go in and can move a market, and they do it to adjust and make what they want from the positions that they're moving around. And so they could be in stocks, it could be in the ETFs, it could be all the way across the board. But a lot is happening, I believe, in preparation for tomorrow. That they're either taking stuff off and they're clearing it, because you can tell from the size of the number of shares that traded and the number of contracts that traded, up and down, up and down. Now, spiders today, 102 million shares of spider traded. 102. That's huge, folks. And then I can take a look at the Qs, and the Qs are 70 million. So, it's a lot changing hands. And I think a lot of it was in preparation for tomorrow. Either they got the opportunity to take it today, the market's moved in a particular way. And regardless of, and I'm telling all this now because regardless, I believe, of what sure, maybe some of it had to do with the emotional reactions. It's like, oh, the government is now going to reopen. That was good. Oh, but suddenly we're going to get all this back news now, right? All these back numbers and how that's going to really affect it. And oh, by the way, the Fed is, and their remarks and speeches today were kind of talking about, no, we need more data. We need the current data before we would be able to decide for December. Oh, that turns all that sour. And I'm like, no, you know what? The ones that were trading NVIDIA were not thinking about the interest rates. Those traders, no, they were not thinking about the interest rates. Neither the traders in the NASDAQ or the ES. They were not thinking about that at all. They were doing the math. And the math is that you're taking all of these levels, gamma levels, deltas, et cetera. You're just taking either fib levels, you're taking everything and you're feeding it in to an algorithm, and this is what it's spitting back. Or your combination to how you're actually going to trade that product and how you're going to change around a position. That had everything to do with the Greeks, and it did with, oh, by the way, did you notice that the Fed may not lower in December? We're all counting on that? No, I'm sorry, that's just not in it. So I think and my other point is, I'm sticking to the math. I'm sticking to the probabilities. I'm sticking to, what the gamma levels are telling me and how that is, where they are produced, and what happens when the market trades through them, what needs to change. Things are changing. Money is changing hands, folks, but it's happening in a manner of making adjustments to a gamma level. So doing the math. And so that's why I'm saying I'm sticking to the math, because it seems to follow through. And that's how all of these levels are coming up, because they're sticking to fibs. And the pattern itself is fitting into what I'm looking for. So right now, as weird as all of this is, coming down as deep as it did, and now basically doing it again, not as strong. It's a lesser degree, but that was a strong sell today. Now, as a trader, it was a strong sell. And constantly, just kind of getting up to a certain level and going like, wow, here come the sellers again, boom, and they knocking it all the way back down. And it rotated between stocks. So again, a lot of preparation because of tomorrow's expiration in all the stocks, ETFs, et cetera. So I think that's another big thing. So it could be a very slow day tomorrow, for example, because a lot of it got done today. We'll see. We definitely will see. But I think as far as the wave count goes, we are remaining within that minuet wave 5 as a part of the minute wave 5, and then completing all the way up from there. So we're in minute wave 5, and inside of that, we're in minuet wave 5, which again is inside of that minute 5th wave ending diagonal triangle. And so that remains in effect. This, what we did today, I believe, put in the B wave. Now, there is the potential in the market, and I will show you why. I'm going to come down all the way to the 15-minute chart, which you open that. I want to look at this. See how this is being left? Market's now closed. It'll reopen in 50 minutes. So, but here, that's 3. And it was working its way down. So there's the potential, taking it back out to that hourly chart and opening it up, where what we have now coming off, we have the A, B, and then 1, 2, 3, 4, and we got one more. So pulling that open a little bit, or just bringing it back out, leaving open then the potential that the market might come down to 67.14. That's our next fib level for the B wave. Here's what the B wave cannot do. It cannot break below. So again, in a diagonal, particularly in a fifth wave, that's where we are. We're in a minuet fifth wave, which will form an ABC. And here's the A and now the B. So if I'm looking for a C wave, the C wave will be 5 waves. But what this B wave should not and cannot do is go down and break below the end point for the previous 4th wave. So in other words, this particular B wave being a part of an impulse move, right? 5th wave should be part of an impulse, should not break below or form an irregular B wave. So in other words, in the direction, if it were to go down and go beyond that, could I stick 1.618, 1.3236, 1.382 here to kind of show, well, how far could it go down and then still go back and rally? No, I don't believe that's going to be a part of it. In a 4th wave, yes. In a 5th wave of a diagonal, I'm going to start off by saying no, I don't think so. So again, that's what I believe it can't do. If it does, then we're off to an alternate. And I know that there are many of you that like to have the idea of what that alternate would be. It truly hasn't changed. It either could be a failure here or it could be all done there, and then makes it very difficult as to what all of this is. So again, the nature of this, it was extremely impulsive, like, right? We did 1, ABC 2, and the 3rd is very 3rd-like. So yeah, it could be working a 5 down and still here from there to there, a 5 down, and still be an ABC and still be a B wave, but it can't cross that line. Then I think we have to consider this something else. And this is turning into a wave 1 coming down of something. So either we finish it there, and this is an ugly wave 1, but still could be a wave 1, and this is a wave 2, ABC wave 2, and then this is coming down in a wave 3. It could. It's not choice number 1, obviously, because I'm still believing we're inside this triangle. But should the market start breaking down, it's going to invalidate this. As long as it stays within the pattern, again, with the confines of what's been put on the market by the market. If this is the pattern that you're working, then this is what needs to get done. Doesn't mean the market has to adhere to it. It's I, as the analyst, or we as the analysts here, we're the ones that have to adhere to it. Now, so that's what I'm saying, that if it starts to break down and goes below that level, I will have to come back, and I'm either going to call the whole thing finished there, and this is a 1 and a 2, and we're coming down. But here's the other thing to try to grasp and to digest this fact. If it does and it breaks there, it's not just going to stop and go, oh, okay, this is going to happen and we're going to pile in. I believe it could trigger a lot to push harder. So again, being tomorrow's expiration, if they weren't done with it today and they've got a lot coming in tomorrow, and we start going down through those levels, then it changes how things are going to trade, obviously. So if puts come into trouble or calls just kind of get wiped out, and yeah, it's going to change the dynamic of people's corporations, everybody's positions, traders' positions. So again, I'm holding to what I have, as strange as it all has been, and it has been. And to be honest with you, it has been all the way. Basically, from here on up, it's been strange. This was strange. This was all about tariffs. We were on the well. We were going fine. But this got exaggerated for a fourth wave because of the tariffs. This, because of the tariffs, talk back and forth and other things that suddenly were going to propel the market, AI in particular. So as things took over. So again, as it all filters through and we're coming back, it's like I still have to follow pattern. And yes, there's a way that I can say 1, 2, 3, 4, and that's the 5. And that's it. And all of this is just the beginning of the next leg down. And again, I'm going to tell you, I'm in the ES. I have to go all the way up to the cycle 3. That's what I've completed there. So these are beginning stages of a much larger correction. And you can see, bringing it back down, you can see what happened. The strength behind it was just like, God, they're just hitting any bid that shows up. And they were. And it goes faster. And then it bumps faster and just both directions. And as I said, I think that type of trading is going to continue probably right through year end, or at least until we get further into December. All right, so I'm leaving it as such. I'll put the B wave in there. I'm leaving open the potential that the market can drop one more time. As I showed you, 1, 2, 3, 4, and then the 5. And the 5 probably would work to come out here if that 4 is done, which it might be because that's 78 and this is 62 on the close. So we'll see. And then once done, we know it cannot crawl and fall below this level. That invalidates it, and more likely then it's all done, and the 5 is going to go all the way up there, and this is going to be 1, 2, and that's a 3. Take the hint. Because we're actually, to tell you the truth, if it is going to be a third, this is only going to be wave 1 of 3. Okay, wave 1 of 3. So we get a wave 2, and then we go whipping back down yet again. Now, if we don't break that, then I can put a B under it, and we're looking for a C wave to begin now. Versus wave 1 of 3 and wave 2 of 3, followed by another massive drop. Now, those are alternates. And yes, I am expecting moves like that once we're done with what I think is still the high to come in for that all the way up to that cycle 3rd wave. Now, no, I'm not hanging on to a bullish attitude. I'm just doing my math, and I'm working the math for each of the counts and for how the gamma levels, how the options are affecting this, what's going on there. So I'm not really going on, well, the Fed's going to do this or that's happening here, or what are their earnings going to be? Yeah, some earnings do have a say, but we're realizing that it's momentary. It might be a week, it could be a day, it could be maybe a few days, it could be a month, or they park back and forth. But the overall business about earnings is not that carries this thing for years or even months. It's all momentary. So again, options. All right. Let's see. I'm getting nothing. We've got this backlog of data that needs to come out. No news yet on how that's all going to get accomplished. Because tomorrow, supposedly, like today, we're supposed to do CPI. Tomorrow's PPI. Don't know. Is it going to come out? I don't know. And what else? Let me just double check to see what else was going to be on tap, or maybe will be. I don't know. We have U.S. retail sales, producer price index, and business inventories. Now, all of those are kind of marked going like not going to happen. So if they do, well, we'll start to play catch up. We did get the monthly U.S. federal budget today. Okay. So again, and I don't know the schedule to get caught up on all these numbers. We need to get unemployment data. We need to get initial jobless claims data. We need to get retail sales data. We need to get all of it. That's what we all need to factor in to what's the health of the economy. So let's see how this all plays. All right. So I'm going to leave it right there. And the next update, along with the updated gamma levels, will be tomorrow morning.